So just got a report from Bank of America. They are calling for a 50 basis point rate cut. That is now their call for the March meeting. Really one of the first investment.
50.
Big, and not only that, they're saying that a surprise rate cut or an intermediate cut is possible, an emergency cut. Now, markets are reacting to commentary today from St. Louis Fed President James Bullard, where he joined other Fed officials in appearing to lean against any near-term rate cut. Bullard saying the Fed could cut rates if a global pandemic actually develops, but that is not the baseline case. That followed comments yesterday from Chicago Fed President Charles Evans, who said Fed action would be, quote, premature until we have more data, followed by or preceded by Fed Vice Chair Richard Clarida on Monday, who announced that it's, quote, still too soon to even speculate whether coronavirus will lead to a change in the outlook. While all that's going on, you just heard what I said about B of A. The markets are leaning against they may be leaning against it, but futures markets continue to aggressively price in rate cuts. Take a look at these numbers we have here now. 100% probability of a rate cut in March. And Kelly Evans will remember that was 2 days ago.
Big from yesterday.
It was a zero, not up from yesterday, but March wasn't even in play
before,
2 days ago.
Right.
But not only that, there's a 49% probability of a 50 basis point cut at the March meeting. If you guys would remember that number, I want to come back to that in just a sec because I want to show you the rest of the tenor out there, which shows that there is now, if you don't get 2 cuts in March, you would get a 69% probability of 1 in April. Third cut for June, 51% probability, 55% chance of a November 4th cut, or a full percentage point being baked in. Former Fed Governor Kevin Warsh on Squawk this morning, reiterating his support for coordinated global rate cuts, a move he argues would give U.S. businesses some breathing room.
If this thing manifests itself in an ugly way, my instinct would be that Chairman Powell needs to reach out to his counterparts around the world and buy some time. That's what a quarter point could do.
All right, so I asked you to remember that 50 basis point cut possibility for March. Let's all do some simple math. If the market is baking in 50 or close to baking in, what would it take for the Fed to surprise the market?
True. But they haven't been doing that so much lately,
well,
right? They've just been kind of meeting them where they are.
What they wanted to do more or less in the crisis was, if the market expected this, in order to have maximum effect, they did that. So I don't even want to say it, but a 75 basis point
but still
would not necessarily be off the table if you think the Fed would want to surprise the market for maximum impact.
That financial crisis, though, was something intrinsic to the financial system. You know, it came about because of distortions there. It needed to be addressed there and mitigated that way. Can we say the same for coronavirus?
I would agree with the premise of your question. There is no evidence now that what's going on is inside the plumbing of the financial system. There's no sense at all that the market is not clearing. We had a bit of a debate on halftime. It is a crash of the market, but if you look at the way it has gotten to those prices, as far as I can tell, we haven't gapped down. There's been nobody who's been out there here. Here's a security, and people can't sell it. That would be a drying up of liquidity. We don't have that evidence yet, Kelly. So you're absolutely right that perhaps the kind of emergency stuff that I'm talking about would not be warranted.
Who or what would a rate cut help?
There's a big debate about that. You could argue that if banks are reluctant to lend, then at a certain lower interest rate, they might be more, or borrowers are reluctant to borrow, that at a certain lower interest rate, they would be more willing to borrow and do certain things. There are parts of this crisis that would appear, however, to defy any impact or stimulation from Fed rate cuts. Like, for example, the absence of supply from China, the unwillingness of people to go and do certain spending would not necessarily, we talked about this.
I mean, is it going to increase my propensity to spend?
Honey, let's go to dinner because interest rates are lower. No, or let's go to a concert where you risk getting coronavirus.
Let's go buy a pair of Pradas.
Right,
whatever,
exactly. You can imagine, though, if we develop what Kelly's talking about, which is concern, either spreads blowing out or some situation like that where it becomes a financial issue, it would have more effect. You could imagine other things the Fed could do. My best guess right now is Jay Powell is hunkering down with his advisors and trying to get creative. The message I'm getting from the wall that we put up and the comments made by Fed officials is that they don't want to cut rates here.
Reluctance, yep.
And they may want to try some other means to try to simulate.
I know you've said they've never done this regulatory forbearance on small business loans type of thing, but now would be a great time if we're talking about extraordinary measures. Why not give that a try? He's a lawyer. It seems more like it could be up his alley.
Kelly, it's a good idea, but imagine the optics of it vis-a-vis the optics of a rate cut. If I come on and say the Fed has an emergency announcement that it's giving regulatory forbearance to small business, I might get a collective yawn, or they might throw something at the television and say, where's the rate cut that I demand?
Right.